Welcome to this deep dive. Today we're digging into Hims and Hers Health, Inc. That's ticker XMDAs on the New York Stock Exchange.
Right. Based in San Francisco, founded, 2017? By Andrew Dudum, Jack Abraham, and Hillary Coles.
Exactly. And they've really made a name for themselves with this direct-to-consumer telehealth platform.
Yeah, connecting users with doctors, getting prescriptions delivered, all through their websites and apps. Pretty slick.
Very accessible, discreet, seems to appeal to people wanting quick, personalized healthcare info. So our mission today is clear.
Yep. Extract the key stuff about Hims and Hers specifically for you if you're considering it as an investment.
Okay, let's start with how they got here, their evolution.
Sure. They kick things off focusing squarely on men's health. The sensitive stuff, erectile dysfunction, hair loss.
Right, that was their initial niche.
But, and this is interesting for investors, they didn't just stay there. They expanded into women's health, birth control, flibanserin.
Showing a plan to grab a bigger piece of the market.
Definitely. And look at their services now. Mental health therapy, meds, dermatology, weight management.
Yes, the GLP-1s like Wegovy, that's a big one now.
Huge. And of course, their original sexual health services. So it's a much more diversified offering today.
Which, from an investor angle, spreads the risk and potentially boosts revenue streams, right?
Absolutely. Now, the business model itself is worth understanding. It's subscription-based.
What are we talking cost-wise?
Ranges from about $20 to $85 a month. And that typically covers the consultation, the prescription if needed, and home delivery.
So it cuts out the hassle of in-person visits, insurance paperwork.
Exactly. Speed, convenience, privacy, those are the big selling points. Probably drives a lot of their user growth.
And they're using tech too, right? MedMatch?
Yeah, their AI tool. It's designed to help personalize treatment plans. Shows they're thinking about innovation, leveraging tech.
Okay, let's get to the financials. Always critical for investors. Q1 2025.
Pretty staggering, actually. Revenue hit $586 million.
Wow, $586 million. How does that compare?
That's up 111% year over year. Massive growth. Adjusted earnings were $0.20 per share.
And user numbers.
Subscribers reached 2.4 million, which is a 38% increase. And they're getting more per user, too. Average monthly payment is up 53% to $84.
Okay, so top-line growth, user growth, revenue per user growth. What about profitability?
That's the kicker. They achieved GAAP profitability. Gross margins are strong, 82%.
Nice.
And the balance sheet looks solid. Debt-free, about $200 million in cash. It paints a pretty healthy financial picture.
That's quite the turnaround. And their track record.
Consistently strong. They've actually beaten revenue estimates for 14 quarters in a row.
14. That's impressive consistency.
It is. And their forecasts are ambitious. They're guiding for $2.3 to $2.4 billion in revenue for 2025.
And longer term.
Aiming for $6.5 billion by 2030. So the growth story they're telling is significant.
Yeah, there have been some recent developments, the weight loss drug partnerships.
Right. The big one is partnering with Novo Nordisk to distribute Wegovy. That's priced at $599 a month on their platform.
Tapping into a massive market there.
Absolutely. Though it's worth noting, they previously offered compounded semaglutide.
And then the FDA guidance changed on the shortage, right?
Exactly. So there was some regulatory scrutiny there. Shows they have to adapt quickly.
And the stock price hasn't always been a smooth ride.
No, there's been volatility, sometimes linked to maybe cautious forecasts, sometimes public reaction to marketing, or even things like political donations making headlines. Investors need to be aware of that sensitivity.
Okay, so what makes them stand out? Their competitive edge?
Well, the direct-to-consumer model is key. That subscription pricing offers predictability.
And the speed. Diagnosis, prescription, sometimes same-day shipping.
Huge differentiator compared to traditional routes. Plus, their focus on specific conditions, the AI integration with MedMatch.
And the branding seems to click, especially with younger people.
Yeah, that millennial-friendly brand appeal is definitely an asset. And the fact you don't need insurance simplifies access for many.
But they're not operating in a vacuum. Who are the main competitors?
Oh, it's a busy space. You've got broad telemedicine players like Teladoc, Amazon Clinic, GoodRx.
And the direct competitors in prescriptions.
Like Ro, Keeps, Lemonade Health. For mental health, think BetterHelp or Cerebral.
And weight loss.
Noom, Found, Sequence, which is now part of Weight Watchers. So yeah, competition across all their main service lines. Understanding that is crucial context for market share.
So boiling it down for an investor, why the interest in Hims and Hers?
It really comes down to a few things. First, that rapid growth we talked about, the Q1 numbers speak volumes.
An expansion into weight loss is a big potential driver, too.
Definitely. Then there's the track record. Those 14 quarters exceeding estimates build some confidence.
Don't forget the tech angle with MedMatch.
Right, the AI innovation. And finally, that strong brand resonance, particularly with younger demographics.
Looking ahead then, what's the outlook?
Continued growth seems to be the expectation, fueled by adding more services and more partnerships.
They're aiming to really redefine telehealth, it sounds like.
That's the narrative, a strong financial outlook, innovative approach. But they'll need to navigate those regulatory and market challenges we mentioned.
Okay, so let's quickly recap the core message for investors.
Hims and Hers, a fast-growing telehealth company, direct-to-consumer subscription model, impressive recent financials, ambitious future goals.
Right. Strong revenue, growing user base. So let's leave you with a final thought to chew on.
Given this rapid growth, the strategic partnerships, but also the dynamic, sometimes volatile market.
What are the really crucial long-term factors that will ultimately decide if Hims and Hers can sustain this success story in the telehealth landscape?